Hey, this is Sasha, and welcome to another episode here on Hungry for Returns. And in this episode, we're going to take a look at earnings beats, but why stocks still drop. There's a lot of different reasons, but we're going to tackle and answer this question here for you today. Now, if you have a personal question regarding investing, trading, or anything about the market, then feel free to reach out on our website at tradersfly.com, where you can submit a regular written question or even submit one by voice, and you might get your question answered in more detail by video. So let's take a look at this question specifically and go into our Q&A session. So here in this question, they write, "Hi Sasha, I'm wondering if you could explain something for me. I have been trading for a year and a half now, and I am a momentum trader. The latest big loss was a stock I own. Earnings just came out the other day, which killed all estimates, but it has been diving the last few days by about 20+%. Since listening to your episodes, I normally don't hold during earnings season, but I took a chance and it cost me big time. Do you have any thoughts on this? Any insight would be helpful. Thank you so much, Michael." Okay, so here's the thing with earnings. You never really know which way the stock is going to go. So if we go ahead and look at some of these things with earnings, typically what I recommend is, can you hold a stock through earnings? Absolutely, but it would be stocks more on the long-term portfolio holdings. So it'd be stocks that you're actually holding for the long haul, stocks that you're looking to, let's just say, hold for multiple months or multiple years into the future. And of course, you could go ahead and create option contracts on those as well, but if we're looking for stocks to hold through earnings, it would be stocks more like the dividend-paying stocks or stocks you're looking to really hold on to for the long haul. So with that in mind, when you're looking at this, and let's just say here's our earnings that we have that are coming up, a lot of times on these dividend-paying stocks, especially in the recent market, we've been doing really well, and stocks do beat the market quite well. But sometimes, even if they beat the earnings, and I'm not exactly sure here on Facebook whether they beat the earnings at this point or not, but let's just say they did, stocks can go down for a lot of different reasons, even if the earnings are great. So let's say I owned a company, and if I owned a company and we beat and hit our earnings, we dominated our sales from the last quarter, but then I said, hey, next year looks like it's going to be really, really bad. I don't think I'm going to do a good job with managing the company. I think sales are going to dive and tank, and we're going to have to fire a lot of people. Do you think the stock is actually going to go up? Probably not. Now, they don't say it cut and dry like that. Usually people on the earnings reports, whoever's giving the report, is going to try to make it seem nice, right? They work for the company. They're trying to keep the investors. So they might say things, hey, our profit target might be reduced by $0.25 billion or $0.5 million, whatever the case may be, or whatever number they want to throw it around, and then they'll throw a positive into it. But we look to make it back through our new innovation on this next product. So they always try to sugarcoat it, right? It's not always like with your Uncle Bob sitting on the porch. And, if Uncle Bob's talking about his company, he's going to say, yeah, our sales really suck this year. They're not going to say that. They're always looking to sugarcoat these kinds of numbers and figures. But, as you dive deeper into the reports and start looking at it, these big investors and hedge funds, they break these things down. And so if they see, hey, things don't look good for the next year, well, that's where things can actually nosedive. Now, I really wish they just, said it bluntly, hey, we're looking to lose probably $25 million next year, or we're looking to lose $1 billion next year, or, but they don't really say it not that way. They make it more confusing. So this is why stocks actually really can sell off even if earnings are great. Let's just say with Facebook, right here, if earnings were great and they said, yeah, but we also noticed we had a data breach of 150 million people, well, that could also nosedive the stock. So any kind of negative news, any kind of negative forecasting could really toast a stock. So take a look at Caterpillar, the same thing. I'm not sure if all of these were positive reports, but let's say they were. And then let's say we got into over here, even if it might have been positive, well, the stock ran up quite a bit. And they say, hey, we expect maybe a slightly slowed growth over the next year. then probably the stock will pull back slightly, and that is what may end up happening. So that's really the case, is that it's not just about the current period, it's also about looking at investments in the future, because people are holding these stocks and looking to hold them for the next year, 2 years, 10 years, 20 years. And if that's the case and a company states, hey, we don't like the next year outlook and we don't like we have to reduce our profit target over the next 1 to 2 years, then that could actually become a problem, and that's where the stock can sell off. Now, in smaller companies or lighter traded, let's just say smaller dollar value price stocks, they can move much more. Like, let's say AMD. If you have a really positive news, you could really explode higher. If you also have a very negative news kind of or outlook, and let's just see if we can backtrack this a little bit. You might have a big dive. Not even sure here if I could pull up one that's older. Let's see, flowers. See if we got 1-800-Flowers or Flower Foods. Cheaper stocks right here that when they're cheaper, they have more volatility, especially if the volume's a bit weaker. I mean, this one is not too weak, but what you can see is you'll get massive sell-offs during earnings time sometimes right here. And I'm not sure if the earnings were good or bad, but this is what could happen when the stocks are a little bit cheaper. They're a little less stable. Mattel now is just kind of diving a bit, so they're kind of expected with a lot of negativity. But things like Walmart, in general, their revenues are kind of stable. Sometimes you get like a little explosive effect, but then you get pulled back to the normal trend. So anyways, as far as stocks selling off, even if earnings are great, you'll see much more volatility with smaller companies. But with bigger companies, that can happen because their projections into the future just don't look as good. And that's to be expected, because then people say, hey, over the next 2 to 3 years, maybe it's not as good of an investment. And maybe instead of holding 10,000 shares, they might pare it back to 5,000 or 1,000 shares, or whatever the case may be. They're just reducing their positions. They might not sell it fully, but they might just pull back their total investment in that company. All right, so I hope this makes sense and gives you some insight and perspective. So that's why if you're doing short-term trading and speculative trading, then you want to be careful with earnings dates. But if you're holding a stock for multiple years, then you'll probably have to hold it through earnings, and that's just the nature of the business. So thanks for joining me. I hope you enjoyed this Q&A session. And if you have a question that you want answered, go to our website at tradersfly.com. And you can submit a written question or a voice question, and we can answer it here for you on video. Thanks again, and I'll see you next time.